up some stuff. We've been doing a little bit of trading this morning and just lost track of time. Thank you for calling, Robert. Okay, this line's over here. This guy needs to move up a tad as well. So we've had a little bit of a up and down this morning. Hey, good morning, Ed. Let me get myself together over here. Somehow I don't have what I'm looking for here. Where am I here? Okay, that's good. Move this. Okay, so yeah, I've taken a few trades this morning, trying to listen to Ed, going more with trend and going for a little bit bigger target. And I got up earlier this morning, and I managed to take a couple of trades after the news. I let the news pass by. We were talking with Preston, and we were the market was moving really slowly then. This morning we had retail sales. It took and moved the market pretty decently. And we didn't trade anything in here. I thought that with this little pullback near our purple line, I would have been able to sneak at least 4 or 5 ticks to have it come back to the POC, and no dice, it came back and got me. In fact, I had taken the trade halfway down the bar, and I thought I grabbed the red line and moved it up. Too many lines, and it turns out I ended up moving the blue line instead of the red line, and ended up taking a full stop here instead of just taking half a stop. Not fun. I then waited a little bit longer, and I took this bar right here, closing outside of the box. I suspected it was going to run pretty good. We had at least to the POC up at the top, and I put my order just right at the POC and recovered 8 of the stupidly 12 ticks that I'd lost previously. And down here, I didn't take the counter up at the top. I don't know if I was talking or what it was, but I didn't take this one here. When I'm talking and doing with Preston or with one of the students, sometimes I miss the trades. This one here would have been a good trade to take. It falls along the criteria of what I talk about with the who got hurt trade for you, Tyler and Preston. We've got 2 wicks up here. We traded above them by a decent amount, and we closed back down into the range. So, and there's enough room from here all the way down to the POC that would have been fine, but it gave a decent run here all the way down. It's like, my goodness, missed that whole run over here. So it came down, and we had a who got hurt on the opposite side. Here you are. You got a robot box over here. We came down below it, and we even closed right on the bottom of the robot box after these wicks. Had to take this one here. So took it long. It's a trend trade. It came up. It gave me first target, and it missed my second target. I remember seeing it 1.5, but I'm pretty sure it went 1.75. It missed my tick it missed my target by just a tick. And I was saying to myself, this thing's going to go all the way up there. But this time I grabbed my target on my stop, and I moved it up to break even. And I ended up with, actually, no, I didn't move it to break even. I moved it up to -4, and I ended up making nothing on the trade. Now, Preston didn't protect anything in here, and he ended up with a full target up on the zone over here. Just one thing I want to mention about this. You have a bar that comes down, who got hurt trade, you get your first target. That's great. So if the price is moving in your favor, right, and it gets to 6 ticks, right, that means that you've got another $75 in the bag. I mean, you haven't closed the trade. It might be a wise idea to grab your stop and pull it up, especially if you're down, right? You don't want to turn a winning trade into a nothing trade like I did, right? So it went up like this, and missed my target by a fraction, and then it made its way all the way back down. Tapped me out at -4. And this next bar, this next bar is actually a telling bar, because if you have this bar make its way up, right, and make its way all the way back down, which is what it did over here. I'm going to go back to something that Ed said to me 10 years back. The guys that are playing the game and trying to take people's stops, they're not totally evil. I mean, they're this side of evil. They still, most of the time, give you a chance to get out if you want to take it. So if you're coming up and you're beyond your target, you're up at the top of the box and it starts making its way back down, they're giving you a chance to get out. You might want to take it and wait for the next trade, because there's another one coming in not too long. So just, if I hadn't been talking and whatnot, this would not have turned into a zero trade. This one here, what I would have done with it is I would have at least moved to break even to make $50. And if I was still in it after it oscillating back and forth like this, what I would have done is, if it made its way up here and it got halfway down the bar, if it's green all the way here and it starts coming halfway down the bar, that's it. I'm done. I'm going to take a break even or a small loser, and I'll just wait for the next one, right? One of the things that Ed's always mentioned way back when, and we actually don't say too much about this now, the signal is not important. I'm going to say that again. The signal is not important. What's important, the signal is only 1/3 of the trade. You can have a person that takes a mediocre signal and make money, and have a person that is just being careful about what happens in the market and getting out when it doesn't look like it's doing what it's supposed to be doing, and he will make more money on that mediocre signal. The signal is not what's important. It's what you do after that you're in the trade that determines how profitable you're going to be. Are you going to sit in the trade like me, look for a big target and end up with nothing? Right? There was some money in here, right? And I ended up with nothing because I thought that I was going to give it room. Well, I was in the hole. I should have got myself back to break even. So now I'm sitting at break even for the day. I took a short up at the very top, and I haven't done anything since because I've been busy with the room and getting everything started. But pay attention to what happens to you when you're in the trade. Maybe Ed, if he wants to talk about this a little bit more, he's always got some insight in this. But what you do after that you get into the trade is going to determine how profitable you actually are. Are you going to take the money that's on the table? You're going to try to wait for that big runner. You can try to wait for that big runner after that you've got your daily target, right? If you've made your daily target and you want to go back to the well, don't trade your regular number lot size. Use one, right? If you give it back, that's okay. You give it back. But you're only giving back a fraction of it if you're trading one contract instead of two. You have some profit. Okay, good. You can give some of it back on the next. I'm sorry. You can make your money on the next trade, right? And you've got an extra $50 to play with the next one. So, be careful about what you do after that you're in the trade. If there's money on the table and it's not going anywhere, especially if the time of day is a slow time, important to kind of take what's on the table. If you sit there and you wait, most often they'll come back and get you. Remember too that my stop was originally here at 19, right? My stop up here was originally at, let's call it 36. We usually take trades on the edges. So there's no harm in staying in the trade longer. But as soon as you move your stop 4 ticks in, they have license to come and get you. And in this case, what I did is I moved it up. And I ended up getting, just paying commissions. So be proactive about the money that is on the table. Just don't sit there and like a deer in the headlights.
I do have some things to say if you want about that.
Please.
So if you put that at the hard right edge, that particular 840 bar with the diamond, if you put it at the hard right edge, right? So following this, yeah, all the way at the hard right. No, the other one.
I know.
It's long.
Just give me it's there.
There. Okay, so that happens. So you're looking left, you're following it. Starting around 8:30, we had news. So aside from the news, I'm just looking at the price action. And this is tough to do when it moves fast, but it's a lot easier to do when the market's moving slow. So we had a low at 8:30, all the way to the left, and then we had a high, which was a lower high than that really big high from, I guess, 7/15/54. So then we went sideways on a shelf. We came out the bottom and we had a lower low. No, to the left, more to the left. There. So then we had a lower low, right? So traders are going to look at that and they'll say, oh, look, we got a big high all the way at 728. We had a low shelf, we had a low, and we had a lower high compared to the high of 827. And then we went sideways and we peaked out the bottom. So traders are saying, oh, short. Traders get in on the pullback to about, say, about 4-5 bars over. Move your cursor over about 4 or 5 bars. No, to the left. 4 or 5 bars. Yeah. Nope. To the left. Nope.
To the
That
left of the
one.
side?
No. There.
Give me the time.
Well, you got a whole bunch of 830s. Remember, this is happening
Okay.
quick. So
Okay.
to the right, to the right, to the right.
This bar here?
Red bar.
This bar.
That one. Okay, so that's where traders are getting in short. Okay, because it pulled back where the shelf was and closed down. That's your best short entry. Your stop is above the box to the left, the entry bar of into the box, the first box when it first comes in. That's your stop. Nice small stop, maybe a point or two. So the shorts came in because they were told we have a lower low, a lower high, and now another lower low that was to the left outside the box. So they get in short. And it 360s on them, traps them, pauses for a moment, gives more time for more shorts to get in, perhaps a better price on that second red to the right. And then it just whooshes up 1, 2, 3, 4, 5 bars on them. So they're toasted. So if we keep following that, we have now a higher high compared to the high at the beginning of this sequence.
Right here.
No, to the right. No, that's too
This
far.
one?
To the left. You almost had it. To the left. To the left. Maybe let me just take your cursor and I'll.
That's a good idea.
Is that possible?
Yeah. I'll make you co-host. And then I think I can give. Sorry, Ed. I'm going to add that to it.
Okay.
I don't have it.
All right. So you see the red diamond there at 8:30 to the left.
Yeah, this guy.
Yeah.
Here. Yeah.
Yeah. Okay. So we keep following this sequence. So now we got a lower high. We just had a lower low, and we had another lower low, and then a higher high, and then they all died. Okay, that whole sequence happened, and everybody died. So now you're wondering, well, are we going up? Are we going down? I mean, now we're inside, right? We've got a higher high compared to that little red diamond bar, and we're now waiting for a higher low. So we get our higher low at 8:32 in a little bit. We're at 4, yeah, right there. Okay, so we got a higher low. In addition to that, we have these things on our charts, blue lines, moving averages, dotted lines. If we're going to have all that stuff, we got to believe in it. or there's no point having it. It's just confusing if we don't use it. We just drawing lines for the sake of drawing lines. So if you're drawing lines to mean something, then believe in them or don't. So we have a moving average that's up. We have a higher low. We have a blue line that we used and that we drew in. And we had a signal just to the left of us. Whether we took it or not doesn't matter. So that bar to the right, 2 bars to the right, that would have been a great entry to the right. You're to the right of my screen. Yeah, there. No, one more to the left. That bar.
This
Yeah,
bar here.
yeah, that's the one to get in. You're in the box. You got
Yep.
a higher low. You had a higher high. And where's your stop? It's always where's your stop. Where's your
It's at the
stop? If you look,
bottom of the sequence right there.
no, no, no. If you got to look left, you always got to look left because that sequence hasn't finished. So your stop is the bar at 8:30, the last 8:30 signature. To the
Right
right.
here?
No, to the right. The last 8:30 signature. To the right. There. That's your stop below that bar. It's still only about a point or two. It's
But
pretty
why
standard.
here? Is it?
Because you don't know that bar that just ticked up, you don't know what's going to happen on the next bar. And if you go to the back of the bar you get in on, I guarantee 90% of the time, you're going to get stopped out. So you have to go lower than that. So you look left to find a realistic stop. That's your realistic stop. You may not
Okay.
like that stop, but it's only a point. But if you don't like that stop, then you can't take the trade. But if you're trading with a standard 12 ticks, that's 2.5 point, almost 2.5. That's your standard stop. It fits. So you take the trade. And you take the trade and you stay in and you stay in. Once you get that peak out bar to the right, that's when you can go to scratch or something like that. Depends on your tolerance. And you keep on going. It trades up to 41.32-ish area and you start trading backwards. Now you notice you only got one forward excursion tick. You look left, quick glance to the left, and look all the way to the left. What happened that last time we were here? You'll see that you had a box at 0617. Right? You see all the way to the left. Last time you were here at 0617, no? Yes, you had a box. Oh, okay, well, maybe you can't make it through that. That's resistance from earlier this morning. They may or may not be there, but they certainly stopped it on a dime. So I would take my profit. Or you're going to give back 10 ticks or maybe more, hoping that it's going to keep on going. All right, so, and this is all happening in real time. In slow time,
it's... ask a question?
Yes.
So I went long here as opposed to there. Is there a reason why I should have waited to take this green bar rather than this one?
No, you had a signal. It's your signal. So it's reasonable to take it.
I mean, I'm looking at it, I'm saying I'm right near the top of this guy over here.
Okay.
Right? Coming back up, robot boxes in behind.
Mm-hmm.
We've had 3 bars. Yes, one of them is inside the box, but we got a little bit of momentum coming out of it, but it's in and around this whole area. We closed up with momentum. This bar here actually traded. It was red quite a bit, and then it turned all green. I thought it was going to go straight up.
And what's your standard stop?
Just in behind the bar, 12 ticks.
Okay, well, okay.
Well, so if I had been using your logic, my stop should have been back down here.
Your stop should have been look left. That's your stop. So if that was too big, don't take that one.
Okay.
That's one way you can filter it. But if that happens a lot, you're going to remember the pain. You're not going to remember the pleasure. So if that happens a lot, then you have to say, okay, well, maybe I need to put a filter in there that says if my pivot to the left is too big, I shouldn't take that signal. That's another filter. If you're doing it discretionary, it's a decision you have to make. Your ability to make that same decision over and over is very difficult because we only remember the times when it proves us wrong. So, okay, we're trying to get to the hard red edge. So regardless of that, the next bar, even if you got stopped out on that, the next bar traded up. Our ability to jump back in after a stop has nothing to do with what's happening on the chart. It has more to do with our ability to just let it go. We take a series of wins and losses. Sometimes they come in pairs, sometimes they come in threes, but so do the wins come in pairs and threes. So we can't keep going by that feeling because we're not going to be able to be consistent with our decisions. So say we jumped into that trade again. If we look left, there's every reason to do that. There's not many
That
reasons not to. There's more reasons not to take the signal because the stop size was too big. But on that bar that you're on, there was no reason not to because the stop is tiny. It fits. So you take that trade, you go, and like I said, you take your profit. You got this big push down, and now you get to that bar at the end there at 839. If I look left, we got a shelf, which was a launching pad before. We have a higher high, and we have a higher low to our left. So there's no reason not to take that signal. Our
but a
moving
higher,
average
you got a higher high, and now you got a lower low.
that
It
hasn't finished
confuses
yet.
the pattern, though.
No,
It's-
that bar that we're on has not finished. That's not going to be a low until the next bar. We don't know yet.
Okay. Well, it did finish. I mean, we're looking at the bar. It's closed up.
Okay, so then your decision is made on this bar, not the next one.
Yeah.
Right?
Right.
That's the
I
future.
did. I did take it on this bar.
Okay, so that's great. And if you look left, your higher pivot says go long. And if you look left, your pivot to the far left of that says, your stop is behind that. Yeah, at least behind that bar, which puts you a tick or two below this bar. It's not this bar that determines what's going to happen next. What determines what's going to happen next is the next bar. We're always lagging. We don't know the next bar. All we know is to the left. And if everything fits, take it because we don't know what's going to happen on the next tick. So if you take that bar, you get in, go one bar to the right.
One more to the right.
Yeah. Okay, cool. First target. Your stop is still behind your original bar. It's actually still the pivot to the left. But say you got a first target. You can stay behind this depending on what your first target is. You can go to scratch or you can go to break even, whatever it is you want to do. If you decide that you've got a profit already and that this is the one to swing for the fence, and in my opinion, if you've got these dashed lines and you took a trade at your blue line and you got the launching pad to the left, this might make it all the way back up to that red line. I mean, it swung up at 832. It swung down to your entry bar. It may just swing right back up, right? I mean, we had a whole bunch of sideways, a grinding up, and then a pullback and a sideways box to the left, and then a nice run up and a nice run down, and it just might grind its way back up. Is it going to be a nice clean run? Who knows? Will it be a grind? If I was to plunk money down, I'd say they're going to grind it, just like they did last time from 830 to 831. They grinded that one. But the one from 832 to 837 was just a run. And the one from 836 down to your entry bar was just a run. So it might happen, but this is it. So you decide if this is going to be the swing for the fence, you have to give it room. The minimum would be to give it the size of the bar you got in on. So say you keep your stop at 41.1925. You got your first target in at +4, +5, and now you wait. So the next bar. Okay. You may not feel good about it and say, okay, I don't want to give this back. But if you decide to swing for the fence, it's all or nothing. It's just the way it is when you swing for the fence. If you're not going to swing for the fence, then it's whatever you can get and lock it in. So this is a swing for the fence. So we make a lot or we make nothing. Worst case, we make a lot or we take a scratch or a small stop out, 4 or 5 ticks. So our stop is still behind on entry. We don't move it yet if we're going to swing for the fence. If we can't take that loss, which looks to be about maybe 10 ticks, if it comes back to 19, maybe 11 ticks. If we can't take that because we don't have enough in the kitty yet to risk it, remember that's free money. We already earned it and we may walk away with nothing, but it's still on the table. It's not ours till we leave the table. Then risk it. Why not? It's the swing for the fence. You already got some money. You know, if you lose this one, you lose this one. You don't lose the last 2 or 3, whatever you got. So next bar. Okay, now that's great. So do you move your stop yet? No, because now we've got a box, and that box has probably drew itself on that down close bar to our left. That's probably
This
when that
red bar.
box got drawn. So now we're in the box. Best thing is just wait. If we get out of that box, you might have it. So next bar. Okay, we're out of that box. Do we move our stop? Yes, because we don't want it to come back. So now we go to scratch. Worst case scenario, 0. It's not going to be a loss. It's going to be 0. Best case scenario, we get the red line at the top, 30, 41, 32 and a half or 33. And you go next bar, next bar, next bar. Okay, next bar. Now you'll start locking some in. Look left. You've got that high that you need to hit. 40, yeah, right there. It's got to close up on this bar. Next bar has to tick up. If it doesn't tick, okay, well, it ticked up. Because if it didn't tick up, it started ticking back, you got to lock something in. And you made it to the red line. This scenario has to be the pattern of your trading. So you have to perform the same actions every single time. If you can code it to do it for you, wonderful. But, you know, all these conditions that we just mentioned have to be met, and it has to be in programming language in order for it to repeat itself. Otherwise, you're going to have to use pattern recognition as a discretionary trader to repeat the same actions over and over again.
Thanks, Ed.
You're welcome. You know, I just got off on a tangent.
No, that was good. That's good. You recorded this, right?
Yes, I did.
Okay.
And I put my trades today in Skype.
Thank you, Ed.
So
All
when
right,
you
so-
say when you say recorded, did it actually everything he just said got recorded?
It did.
And so you're going to be able to distribute that to us? Because I'm just a half a cup of coffee so far this morning,
We're thinking about it.
and you guys I'm like, wow. I think wow is a good word right now. I wish I could hear that again.
Well, I used to.
We're talking about it.
Yeah,
Okay.
we'll talk about it. Tony and I'll talk about it because this is what I did for a living for 20 years. So, you know,
I
we'll
guess you
talk
did pretty
about
good,
it.
huh? Plus you're a sensei and all that. Wow. You're amazing. Anyway,
Thanks.
I just lost my brains just kind of blew up this morning. Thanks. I'll go get more coffee. I'll catch you in a second.
All right, we're right near the POC right here. We've got 3 bars coming down from the bottom side of the range. That closes down. We'll try it short. POC's moved down a bit. A bit of buying going on. I'm going to pause there. You know what? I'm going to change my mind. I'm not going to take it. Let's let it come up a little bit higher. If it comes up. We're right on the POC. Got the box to the left. Got the swing here at 28. We're in and around that chop zone, right? So if we look at it here, You got to be careful in here.
So I included my trades today on a shot, a few frames. If you want to take a look at it, if this gets distributed, you'll be able to see it.
Still has not given 4 ticks from the entry over here. We're oscillating near that purple line and our pivot over here. It may end up breaking up, but we're too close to the POC to do anything. Look at the bars right here. The range is up to 28. It's got to get up over this little wick over here for us to do anything. Robot box is killing us.
We used to have this exercise where I would say, close your eyes and click your mouse and take
I
a
didn't like that
position.
exercise.
And take a position. And then as soon as you click your mouse, you open your eyes and you make some decisions. So that means you have to look left and kind of put it all together in real time and then make a decision. And you got to do it pretty quickly because you may be in a good spot or you may be in a bad spot. And that ability to make these decisions and to look left, to force you to look at it dispassionately, just what's the structure, is a good exercise. And I think it's a difficult exercise, but it's a way to get you to think plainly, not too emotionally about it. It is what it is, and we don't know the future. We only know the future that we're going to create by the next click of the mouse, and that's it.
That's what he made me do. The first day that we traded live after completing the asset test, he wanted to trade with me. And he says, okay. He made me do that exercise. He says, just click long or short. And I said, but there's no signal. He says, just click long or short. I said, but there's no signal. He says, just click long or short. So I can't remember if I went long or if I went short. And he says, now what are you going to do? I said, well, I feel like just clicking the flatten button because there's nothing here. He goes, no. Just base your decision on what it is that you see on the chart. Where's your support? Where's your resistance? Didn't like that exercise, Ed.
Nobody does.
All right, so we're dancing around the POC over here. Preston, on your chart, if you look at your 30-minute chart, you've got it for the first time now. That orange line is the POC, right? And you can see how it's dancing on it, up and down and up and down. Had I taken this straight short, I would have been stopped out.
Tony does. Oh, I'm sorry.
No, go ahead. I was just saying it's dancing between the two lines over here. We need to wait. You're saying?
Oh, okay. Yeah, does 4130 mean anything to you? That I have a line there. I'm just checking balance here, just asking you.
So okay, so you've got kind of a sloppy M going up, down, up, and this is the apex of it coming back down. We're below that. The thing is, we've got our POC sitting up at the top over here. So, and they're going up and down. I didn't check. I don't remember. Are we waiting for news at the top of the hour?
There is some news today, but I think it's at 10:30.
Let's grab this. Let's go.
You have big news at 7.
And in 23 minutes, we've got a decent amount of news. And then even at 10:30, the 10:30 is all related to crude, so that does not affect us too much. But the 10 o'clock has got a couple bulls on it. So we can, as usual, be careful around 10 o'clock. 10 o'clock's always an iffy time. I see nothing. Okay, I'm gonna back in a minute. It's not doing anything. I'm paused. I'll be right back. Wow, look at what I missed. Completely sideways.
Yeah, it looks like they're waiting for something. The opening range is, I mean, it doesn't even really exist yet. It's like what? Maybe 8 points, 10 points, maybe.
It's just sitting here in the middle. Don't be tempted to trade the edges, because one of these times it's just going to scoot out the top and it's going to be a problem. Just wait for it to make a decent run. Like, we don't mind trading this, right? This is what we're looking for, right? Then we go into a box, we got a structure, it's still moving okay. But as soon as it starts doing this, right, it's a problem for us, because we don't know where they're going to break out. They're going to break out to the bottom side, to the upside, and we're not even near an edge, right? I mean, our lowest low is sitting here down around 16, and our highest high in the recent term is 35. It's like 15 points.
Now's a good time for questions.
Well, here's mine, because you say that, but at the same time, Tony, I've talked to you about the little box trade that I like.
Yep. Mm-hmm.
When I see this box develop after four bars,
Mm-hmm.
I like to take and it's a 1-to-1, right? It's 6 ticks against or for, and take the trade within 2 ticks from the bottom on it rising, one long, and then conversely at the top. And like, for instance, on this one, and when it goes against you, the hope is that there's at least one more bar. So if it goes against you the second time, you're break even. But the worst case, you're a 6-tick loss. I had probably, 1, 2, 3, 4, 5, 6. I had 6 good trades and then one bad one. And it's just, it's uber scalping, right? We're talking 5, 6 points. But anyway, I'd like to hear everybody's thoughts on that.
When you're near that POC, it's kind of a magnet. It's kind of sucking itself back and forth and back and forth. Not going to take this first one. Wait for the next one. We got the robot box a little bit further back. We touched the bottom of it. Come on up. Our actual stop is sitting up at 35 and change. It's going to make a robot box up here too.
How many bars till the robot box prints? 3 or 4?
4.
4.
It needs 4. Technically, we've got 4, unless this one here's shifted it just a tick out of the way.
So the person who
4.
just spoke, you traded that shelf from 931.
That was Mark.
Oh, that's,
Yeah.
that's pretty good. And you traded the edges, purple line to blue line. Or
Yeah,
approximately.
usually about 2 ticks off of the bottom, looking for 5 or 6, and then 2 ticks off of the top, and then have a 6 or 7. So it's basically a 1-to-1. And so all you need is 2 trades and you break even.
Mm-hmm.
But hopefully you get at least 3 or 4 and end up ahead.
That's cool. That's good trading. It does this a lot, and when it's waiting, it'll go sideways for an extended period. And there's no reason not to. These are 10 tick bars, so that means there's 2.5 points in each. And if you got a 1.5 stop on either side, you can conceivably get a 1.5 on the inside. But why not? Until, of course, it taps you out. But it's not endless, but sometimes it's going to work and sometimes it's not. It depends on how many boxes start stacking themselves. So you got 1, 2, 3, 4. And that's pretty cool. It's when they start stair-stepping a little bit, overlapping to one direction, that it gets kind of dicey. So you had 1 down blue, 1 red up. You had another red equal to the blue to the left, and then another blue equal to the blue to the left. So that's pretty cool. I'd like to see those.
Take a screenshot, send it to him. Message me. I'll give you his email address or his Skype. You can just send it to him.
Okay.
Okay, we got a 3-bar right here on our robot boxes, but it's right on our POC, making me nervous. So up here, this last 3-bar, the one that I skipped up at the top, we would have survived it by a couple of ticks. Not liking it.
This 3-bar here
There-
delivered.
Right off of the POC.
So if they're going to stay in this pattern of not going anywhere, well, now we have a lower high compared to the highest high to the left. And we have a higher low compared to the lowest low to the left. And then we have a series of 1, 2 higher lows. We just made a new higher low right now. And if we make a higher high here than the one immediately to the left, it's going to get longs, starting to think long. And they might start buying on pullbacks to your blue line if it does that. It's not going to pick a directional until it takes out the highest high to the left, which is still, up there around 36 or whatever it is. Yeah. So this pattern of higher highs, higher lows is how they get traders thinking one direction or another. And you have to count them and keep looking left, because a lot of times they'll do one side or the other. They'll do a lower high, but not a higher low. But it's going to get traders thinking one direction. So we never know how far back this pivot is going to go. But those traders who made that box at 847, that's a robot. So when it hits that number series, that robot could kick in again. And the robot that made the series of boxes from 931, the ones Mark was his name, who traded,
Yep.
that could kick in again. as it comes back for the pullback, what happens is buyers will buy the pullback, and then it may just run them over and go down to the bottom, to the 4120 blue line, or that dotted green line at 4122. So keep thinking of it in terms of
Order
how
submitted.
can they get traders into the market, so they don't care which direction you take, by the way. They want to get longs in, they want to get shorts in, they don't care. They just want traders taking positions. And then they're going to count it up and say, okay, there's more money to the
Order
downside
canceled.
than to the upside. It costs us less to go up first and then come back down. But they need traders in the market. And the longer it stays like this in these narrow ranges, the less traders are going to trade. So they have to convince traders that it's going to do something. The way it does that is by messing with the lows and the highs, the higher lows, and starts trading inside pivots, which it just did just now. So the most despicable thing now to do would be to go and take that 4122 low out. If it takes that low out, it might get traders to start thinking short. They'll start selling the pullback to maybe 4124 and then run back up again and keep doing that. As long as they're waiting for something to happen, which seems to be the case.
I tried it short over here with a little bit of a pullback, and it didn't come back. It gave the 4 ticks before that I was ready for it. So we've made a slightly higher new high. Okay, I'm going to grab my bottom line here and I'm going to put it up at the top over here to see where the most recent high is. Decent amount of buying going on. It's settling itself out. Try it short here, back down into the area. We're still inside this box over here. It's not wanting to go. It's holding right on the
Order submitted.
the upper line at the top. Oh man. All right.
Order
That's
canceled.
twice now.
So if the boxes weren't there, that would be a 3-bar. 1, 2, 3, down close.
So be careful now on the long here. I'm sorry, we're right in this little zone over here near the box, near the POC. Negative bars, negative delta.
So if I'm looking left, we have higher lows, and now we have higher highs. And the one all the way to the left is still there, but we have enough room. So we have a series of higher lows and some higher highs, starting at the lowest low down at 927.
So since we've been trading inside the range in here, you'll notice that our upper red line and our bottom green line are squeezing together. That's where the bulk of the volume is. What time is it? Jeez. So they did what Ed was suggesting. They came up, they made a new higher high. And now they're coming down to make everybody look like it's going to be short. It's actually moving down with some gusto. So we're into our robot boxes right near the POC. Our lowest low is, our current low is sitting at 22. If it trades down below 22 and closes up, they've just ran the whole gauntlet. On down. Okay, so we've made a lower low. Long on close. Long on close.
So with that series of higher lows and higher highs, they got longs coming in on each pullback. Longs, longs, longs. And now they just
You mean
killed them all.
so here's our next lowest low. Squeeze that up a bit.
Order filled. Target filled.
So if there was a case to hold, this is one of them. To go for that big run up to the purple
Order
line,
filled.
maybe. Oh, you jumped back in. Ooh. Okay, your realistic stop.
Software screwed up.
Yeah, the realistic stop on this is that low, not where it is right now. But you know, but if you want to shoot for the fence, this is the one to shoot for the fence. Oh, you don't have a split?
Target filled.
Okay, never mind.
I don't know why it does that. The one to shoot for the fence, huh?
Yeah.
Not letting it take the 3-bar short here. Tons of momentum to the upside. You can see the buying that's going on.
Careful.
Look
on
at our 30.
counters. Be careful on counters. It's cleanup bar.
Cleanup bar on both sides. 2 of them right next to each other. Yeah, I'm not taking 3-bar here. I don't care if it works. There we go.
Now's a good time to just wait for the news to pass.
It's not 10 o'clock yet. Oh, so this is very close. It's so tricky how they do this business with the higher lows, right? Because they make it look like, okay, we're slowly meandering our way up, right? And then we get up to a certain point, and then it's gotcha, and they zip it all the way down. Everybody that's long, doesn't matter where they all got tattooed.
You know, one reason why it can go down like that is because on each time it touches one of your lines, buyers are coming in because they buy on pullbacks. If you buy on the top breakout, I mean, you would toast it instantly. But they're going to buy at your first box. They're going to buy at your second box. They're going to buy at that purple line, massive buy at the purple line. And the reason it can keep going down like that is because there's more inventory just keeps pumping into the long side until everybody just capitulates. And that's it. We're all toasted. And then it goes up. So the ability of people to get back in on the buy side is gone. So it runs out of inventory down at that last bottom bar, closes up, and now people say, okay, let's think short. So it buys its way back up, closes down. Now you might get new buyers right here in this if this bar closes up. Or people
Order
may start
filled.
thinking short. and they'll start shorting.
Filled.
They'll start shorting probably at around 41.22. And if they short enough, it'll go down again. And if there's not enough, it'll hover around there, and it may start meandering its way back up. Now, news is going to hit, so it's going to mess it all up. But that pattern repeats itself over and over again. It's basically just trapping everybody.
So it's been a long while that I did not take a trade from 9:30 until 9:50ish. Always something there. Well, I took that last 3-bar from the bottom edge coming back up. It coincided with our bar sitting down here. I only went for 4, and I traded with 1 contract. There's my 250. So Ed was saying here, this is the one to hold. It might make its way all the way up to the top. But this is what they do. All the way up and all the way back down, right back to where you came in from. You wouldn't have even been able to, you would have been in the hole after being up 4 points, 5 points.
Yes, but we don't know that.
Boxes.
On the bar that we get in, we don't know that.
Mm-hmm.
So what's going to happen is later on, you're only going to remember that it didn't work, and you're never going to do it again. And that's what I'm saying. You have to keep doing that same action, regardless of the result. You got to keep doing the same action. It's your only chance of getting that big run. So it did pull back, and you could have tried it again on that 3-bar up at 9:36, regardless, forget the news. And it would have, see, now it did make it to the purple and now to the next green. So your ability to try it again is very important, because forget the pain. The pain's always going to be there. You got to just keep trading the pattern. When it happens over and over again, you have to trade them. And then you record them, and statistically, that pattern may have a 60 or 70% win rate to that big target, which is great. Now, if it's a 5-to-1 risk reward, you don't need that big a win rate. You can actually do this with a 35% win rate, and it's still highly profitable. The thing is, can you see it every time it shows up?
What happens if you've seen that pattern and you just finished taking a long, or you finished taking a short?
Well, after I take a trade, I usually take a sip of coffee. I write down in my journal. I rarely just jump trade to trade to trade to trade. So I would say spend most of your time just watching it go by, because tomorrow's another day, the next day's another day, the sun will come out, and just watch it go by. And the more you watch it go by, sooner or later, you're going to say, you know what, I'm going to do it. I'm going to do it. And that's what you need to develop, that ability to say, I'm going to do it.
So we're right smack in the middle of Mark's sideways action. Right there. A little bit lower than where the POC was, but right there.
Look at that clean-up candle. Oh, my God. Yikes.
Just be careful near the middle. Near the middle is the worst. 10:01, we're outside of the range. I expected the market to move a little bit more than this.
Yeah, it's only like, what, maybe 20 points?
Mm-hmm.
So something's going on.
There's always something going on, Ed.
No, I mean, something's happening. They didn't react to news. Maybe 10:30. I don't know. Is there anybody speaking?
Nope.
I don't know.
No.
Well, I'm done.
At 10:30, we've got whatchamacallit. At 10:30, we've got the crude news. If you're ever trading the crude, be very careful around this time of day.
All right, I'm going to take off. If there's no
All
questions
right.
or anything, I'm going to take off, okay?
Thanks, Ed.
All right, see you later.
Bye. Okay, I'm done for the morning. Does anyone have any questions? Like we